What if everything you believed about the American dream's safest haven was a lie? Florida was supposed to be untouchable, the promised land of endless sunshine, booming real estate, and tax-free retirement. But right now, behind the palm trees and Instagram beaches, something catastrophic is unfolding that nobody saw coming. Homes are sitting empty for months. Insurance companies are fleeing the state entirely. Over 180,000 properties remain unsold, the highest in state history. This isn't a temporary downturn. This is the beginning of the biggest collapse in Florida's modern history. And by the end of this video, you'll understand exactly why the Sunshine State's real estate empire is cracking under its own weight and what it means for the rest of America. Housing market implosion. Florida's housing market, once the crown jewel of American real estate, is now suffocating under a crisis of its own making. Across the state, more than 180,000 homes sit unsold, the highest inventory level ever recorded. In Tampa alone, unsold properties surged 32% year over year, hitting 19,310 homes. St. Petersburg saw a staggering 164% jump in active listings. Miami's inventory climbed 41% to nearly 52,000 homes. Lakeland Winter Haven jumped 29% to 5,191 properties, 71% higher than 2019 levels. These aren't statistics, they're tombstones marking dead deals and shattered retirement plans. Properties that once sold in 2 weeks now languish for 6 months or longer. Sellers are delusional, listing homes at record prices even as buyers vanish. The median home in Florida's major metros sits on the market 90 to 180 days, gathering digital dust while mortgage payments bleed owners dry. Price cuts are spreading like wildfire across every major market, but they're not enough to move inventory. The gap between what sellers demand and what buyers will pay has become an unbridgeable chasm. Insurance premiums have become the executioner in this collapse. Policies that cost $2,400 3 years ago now exceed $8,000 annually for a basic 3-bedroom home. Coastal homeowners report premiums jumping to $12,000, even $15,000 per year. In Fort Lauderdale, the average premium hit $1,917. West Palm Beach homeowners face $8,618 annually. Hollywood residents pay $150 just to protect their investment. Pompano Beach adds another $178 to the annual burden. These aren't luxury estates on private islands. These are middle-class homes being priced out of existence by risk calculations and climate reality. For working families, the math no longer works. A $400,000 home now carries $24,413 in annual hidden costs, property taxes, insurance, utilities, maintenance, cable, internet. That's $20-60 per month before the mortgage payment even starts. Florida ranks second in the nation for insurance premiums and 9th for total home ownership costs. What was sold as affordable paradise has become a financial trap with no escape hatch. 7 insurance companies collapsed between January 2022 and February 2023. The survivors are abandoning policyholders at unprecedented rates. Florida leads the nation in insurance non-renewals, hitting 3% of all policies in both 2022 and 2023, the highest rate in America. Citizens Property Insurance, the state's insurer of last resort, is drowning in the riskiest policies that private companies refuse to touch. If a major hurricane hits, Citizens won't have the reserves to pay claims. Homeowners will be left holding worthless policies and destroyed properties. The connection between soaring insurance costs and cratering sales becomes painfully clear. Buyers aren't walking away because of mortgage rates alone. They're fleeing because the total cost of ownership has become fundamentally unsustainable. Condo catastrophe. The condo market, Florida's densest concentration of middle-class wealth, is experiencing a financial bloodbath unlike anything in state history. Following the 2021 Surfside Tower collapse that killed 98 people, Florida passed the Building Safety Act. Every condo building over 30 years old must undergo structural integrity assessments and complete mandated repairs by the end of 2025. The financial impact is decimating owners who thought they were buying affordable coastal living and generational wealth. Special assessments are crushing residents with bills they never saw coming. Monthly fees that once ranged from $250 have exploded to $2,500 per month for 3-year terms. Some owners face one-time assessments exceeding $100,000 per unit for concrete restoration, balcony repairs, and structural upgrades that boards delayed for decades. Retirees on fixed Social Security incomes are being forced to choose between eating, buying medication, and keeping their homes. Many are losing that choice entirely. Condo prices are collapsing in real time. Properties under $500,000 saw values drop 6% to 7% in the first quarter of 2025 alone. Southeast Florida, the epicenter of condo density and aging buildings, has seen only 39% of buildings complete required structural studies as of the December 31st, 2024 deadline. The rest are in dangerous limbo, gambling on finding cheaper engineers who will deliver lower repair estimates to avoid resident revolt. Every day of delay increases uncertainty and drives values lower into the abyss. Sales have stopped dead. Units priced aggressively to move sit unsold for months because buyers see the special assessments looming like financial execution dates and run for safer markets. Sellers are trapped, unable to offload properties before the next round of catastrophic fees hits their accounts. Condo associations are voting to finance assessments over longer periods, spreading costs across years. But the damage to property values is already done and irreversible. The financial burden extends far beyond one-time repairs. HOA reserve requirements, previously waived by associations to keep fees low, are now mandatory by state law. Associations that operated on razor-thin margins for years must suddenly stockpile massive cash reserves for future emergencies they never planned for. Monthly fees are doubling, tripling, even quadrupling overnight as boards scramble desperately to meet state mandates and avoid personal liability. Older buildings are becoming completely unsellable properties. Any condo over 30 years old carries the permanent stigma of impending assessments, unresolved structural questions, and exponentially rising insurance costs. Buildings located anywhere near the coast face even more brutal scrutiny from buyers and lenders. The combination has created a death spiral no one can escape. Lower values lead to lower assessment collections, which means longer payment terms, which further depresses values, which drives more owners into foreclosure. The human cost is staggering and accelerating. Middle-class families who bought condos as retirement investments are watching their life savings evaporate in months. The exodus. The migration story that politicians brag about is collapsing into a mass exodus that threatens Florida's economic foundation. Over 10,000 Florida residents fled the state in 2023 alone, abandoning properties, jobs, and the dream they were sold. Georgia absorbed 55,000, 250 former Floridians. Texas took 50,513. North Carolina captured 39th and 31. These aren't vacation moves, they're economic refugees escaping unsustainable costs and climate reality. The median age of those leaving is 32.4 years. Young workers and families with associate degrees who represent Florida's future tax base and skilled labor force. Canadian visitors, once Florida's most reliable revenue stream, are vanishing. First quarter 2025 saw a 13% drop in Canadian arrivals compared to the previous year. By the second quarter, Canadian visitation hit a post-pandemic low, plummeting 26% compared to pre-virus levels. Only 640,000 Canadians visited Florida in Q2 2025, down from over 1.6 million annually before the pandemic. These visitors historically spent billions, money that's now flowing to safer, cheaper destinations. In Miami-Dade County, the state's tourism crown jewel, Canadian spending collapsed by 13% according to Visa transaction data. Canadians represented the largest share of international tourism dollars in the county, about 10 cents of every dollar spent. Their withdrawal is suffocating hotels, restaurants, and attractions that built business models around their loyalty. Of who's leaving versus arriving reveals a devastating truth. Young professionals with college education are fleeing. Wealthier retirees who don't work and drain services without adding to the tax base are arriving. Florida is trading productive workers for non-productive consumers, accelerating its fiscal death spiral. The reasons are brutally clear. Per capita personal income hasn't kept pace with median home listing prices, creating an affordability gap that young families can't bridge. Insurance costs that doubled or tripled in 3 years make home ownership impossible for anyone under 40 without wealthy parents. Property taxes that increase 10% annually, even with homestead exemptions, are pushing middle-class families into financial ruin. Tourism numbers that politicians trumpet as record-breaking hide catastrophic regional declines. While statewide numbers remain inflated by cruise passengers counted as visitors, South Florida hotel occupancy rates are declining. Metro Orlando's hotel occupancy for August 2025 was 59.6%, down from the previous year. Restaurant revenues and tourist corridors are falling month over month. The visitors who do come are spending less per trip, choosing cheaper accommodations, and skipping the premium experiences that generate real profit margins. The connection to the housing crisis becomes undeniable. Workers can't afford to live where they work. Political toxicity. Florida's political leadership has transformed from the state's competitive advantage into its greatest liability, accelerating the collapse through policies that prioritize ideology over economic survival. The insurance crisis is a direct result of legislative failure. Rather than addressing climate risk and building code enforcement, lawmakers passed tort reform bills that gutted consumer protections while insurance companies continued raising rates and abandoning the state entirely. Citizens Property Insurance, the state-run insurer of last resort, now holds over 1.2 million policies, triple the number from 5 years ago. It's catastrophically underfunded. One major hurricane will bankrupt citizens, leaving hundreds of thousands of homeowners with worthless policies and destroyed properties. The condo crisis was predictable and preventable. After the Surfside collapse killed 98 people in June 2021, legislators passed the Building Safety Act with zero consideration for financial impact on owners. No phase-in period, no state assistance fund, no low-interest loan programs, just mandates that instantly destroyed property values and forced retirees into financial ruin. Politicians celebrated passing tough safety laws, then walked away as middle-class wealth evaporated. Property insurance deregulation promised competition and lower rates. The opposite happened. Lawmakers removed consumer protections, allowing insurers to deny claims more easily while raising premiums to record highs. Companies took the deregulation, raised rates anyway, then left the market entirely. Homeowners got the worst of both worlds, higher costs and fewer options. The political toxicity extends beyond policy into rhetoric that's driving away international investment and tourism. Canada, Florida's second largest source of tourists and snowbirds, has seen visitation collapse by 26% as political tensions and culture war positioning make Florida less appealing. European investors who poured billions into Florida real estate are quietly exiting, unwilling to navigate the political chaos and climate denial. Leadership response to the housing crisis has been propaganda, not solutions. Officials tout record tourism while ignoring regional collapses. They celebrate population growth while young workers flee. They claim Florida is more affordable than California, ignoring that Florida now ranks 9th nationally for total homeownership costs. The gap between official messaging and lived reality has become a chasm that destroys credibility. The fiscal impact is accelerating as young workers leave and wealthy retirees arrive. Tax revenue composition shifts dangerously. Workers generate income tax alternatives through spending and economic activity. Retirees consume services, infrastructure, and healthcare without contributing proportionally. Florida's no-income tax model only works if productive workers keep arriving. That model is breaking. Climate policy denial is the ultimate self-inflicted wound. As insurance companies price climate risk into premiums, political leaders insist climate change isn't real or isn't affecting Florida. This disconnect between political messaging and market reality makes Florida look economically illiterate to investors and businesses considering expansion. No serious corporation wants to invest billions in a state whose leadership denies the primary driver of rising operating costs. The leadership crisis connects directly back to housing, manipulation, and denial. The numbers officials celebrate don't match the reality residents are living, revealing a propaganda machine designed to hide Florida's housing collapse. Politicians trumpet record tourism as proof of economic health, but those numbers count cruise passengers who never leave the port, spending a few dollars on trinkets before sailing away. They count day trippers from neighboring states who skip hotels entirely. The metric is intentionally misleading, designed to mask the regional collapses happening across South Florida and Orlando, where actual overnight visitors and hotel occupancy rates are declining month after month. Population growth statistics are equally deceptive. Officials brag about net migration gains while hiding the demographic disaster underneath. Yes, 365,000 people moved to Florida in 2023, but 510,000 left. The newcomers are overwhelmingly retirees who don't work and consume services. The exiters are young workers with college education who generate economic activity and tax revenue. This is a fiscal catastrophe disguised as a success story. Home sale statistics are manipulated to hide market dysfunction. When officials tout strong sales activity, they're counting distressed sales, foreclosure auctions, and properties sold at massive losses after sitting unsold for 8 months. A sale isn't healthy market activity when it represents financial destruction for the seller, but it gets counted the same as a legitimate transaction in official data. The insurance crisis is downplayed through statistical gymnastics. Officials point to Citizens Property Insurance as evidence the market is stabilizing. They ignore that Citizens is catastrophically underfunded, holding 1.2 million policies with reserves reserves that can't cover a single major hurricane. When that hurricane hits, and it will, hundreds of thousands of homeowners will discover their insurance was an illusion. But today, officials pretend the problem is solved because premiums are only rising 10% instead of 30%. Foreclosure data is buried in quarterly reports released with minimal publicity. Florida leads the nation in foreclosure rates, with 4,621 filings in September 2025 alone. Over 15,000 properties started foreclosure in the first half of 2025, up 7% year over year. But officials never mention these numbers when celebrating the housing market. The eviction crisis, with Central Florida seeing 40% more evictions than pre-pandemic, is treated as a local anomaly rather than the statewide catastrophe it represents. Climate risk is the ultimate denial, as insurance companies flee the state because actuaries calculate the risk as uninsurable. Political leadership insists climate change isn't affecting Florida. This gap between market reality and political messaging destroys credibility with the investors, businesses, and international buyers Florida needs to survive. The connection to previous chapters becomes undeniable. No human cost. Behind the statistics and policy failures are millions of Floridians watching their lives collapse in real time, trapped in a crisis they didn't create and can't escape. Foreclosures are accelerating across the state. Over 15,000 properties entered foreclosure proceedings in the first 6 months of 2025, representing families losing homes they thought were secure investments. Florida's foreclosure rate of 1 in every 2,182 homes is among the worst in the nation. These aren't risky subprime borrowers gambling on appreciation. These are middle-class families crushed by insurance premiums that tripled, HOA fees that quadrupled, and property taxes that rose faster than incomes. The eviction crisis is displacing tens of thousands. Central Florida alone saw evictions jump 40% above pre-pandemic levels. Homeless shelters report being exhausted by the volume of newly evicted families seeking help. An eviction on record makes it nearly impossible to rent another home and disqualifies families from Section 8 housing assistance. Workers who served Florida's tourism economy for decades are now living in cars because a single month of unexpected expenses triggered an eviction they can't recover from. Owners are facing financial execution. Retirees who bought units for $150,000 as nest eggs now owe $100,000 in special assessments for structural repairs mandated by state law. Monthly HOA fees that were $250 are now $2,500 as associations scramble to build mandatory reserves. These aren't wealthy investors who can absorb losses. These are 70-year-old former teachers and nurses on fixed Social Security incomes who must choose between eating and housing. Many are choosing neither, walking away from properties that have negative equity and unpayable obligations. Young workers are abandoning career paths because housing costs make life unsustainable. Teachers, nurses, hospitality workers, and first responders can't afford to live in the communities they serve. The median home requires an income of $110,000 in many Florida metros, while teachers earn $48,000 and nurses start at $65,000. Even with roommates and side hustles, the math doesn't work. They're leaving for states where their salaries can cover rent without requiring 3 jobs. The mental health crisis is invisible but accelerating. Families living paycheck to paycheck, one unexpected bill away from homelessness, experience chronic stress that destroys health, relationships, and futures. Children are displaced mid-school year when families are evicted. Elderly homeowners are dying from stress-related illnesses triggered by financial devastation they can't comprehend. The suicide rate among Florida homeowners facing foreclosure has increased. Though officials don't track this metric publicly, climate displacement is beginning. Saltwater intrusion is contaminating groundwater in coastal communities, making tap water undrinkable. Flooding that occurs during king tides now happens monthly, not annually. Homeowners are watching their properties become uninsurable and unsellable, not because of the market, but because the land itself is becoming uninhabitable. They're trapped with mortgages on homes that will be underwater, literally, within a decade. The human cost connects every crisis into one devastating truth: perfect storm convergence. Florida's crisis has reached a stage where the collapse is no longer theoretical, it's structural. Every economic pillar that once sustained the state is now under simultaneous strain. The housing market isn't just cooling, it's hemorrhaging. Insurance premiums soaring to $15,000 annually make properties functionally uninsurable. Over 180,000 unsold homes sit rotting in the sun. Condo owners face special assessments exceeding $100,000 per unit with no escape route. Foreclosures jumped 62% year over year. This isn't a correction waiting to rebound. This is a market fundamentally broken by climate risk, insurance collapse, and affordability destruction that cannot be fixed. Tourism, the state's economic oxygen, is suffocating. Canadian visitors collapsed 26% from pre-pandemic levels, erasing $9 billion in seasonal spending. Hotel occupancy dropped below 62%. Restaurant revenues plunged 28% since early 2025. Political toxicity and international distrust have poisoned Florida's reputation as a safe destination. The exodus is accelerating. Over 510,000 residents fled Florida in 2023, predominantly young workers with college degrees. They're being replaced by retirees who consume services without contributing proportionally. Net domestic migration turned negative in early 2025 for the first time in decades. The demographic swap is a fiscal time bomb. Political leadership has accelerated the collapse through denial. Officials celebrate record tourism while counting cruise passengers who never leave the port. Citizens Property Insurance holds 1.2 million policies but lacks reserves to survive a single major hurricane. When that storm hits, hundreds of thousands will discover their insurance was an illusion. Climate reality is destroying the foundation. Saltwater intrusion contaminates groundwater in coastal communities. King tide flooding now happens monthly instead of annually. Insurance actuaries calculate Florida's risk as uninsurable, which explains why 7 major insurers abandoned the state since 2023. Properties aren't losing value because of market dynamics. The land itself is becoming uninhabitable. The financial system is seizing. Regional banks report delinquency rates on coastal mortgages exceeding 8.5%, double the national average. Retail centers operate at 70% occupancy. Average household savings dropped 22% in 1 year. Credit card delinquency hit 7.4%, highest since 2011. Every crisis feeds the others in a death spiral. Political toxicity drives away tourists and investors. Lost revenue tanks property values. Collapsing housing crushes consumer spending. Declining tax receipts force service cuts. Service cuts accelerate exodus. Round and round, tightening into economic suffocation. Storm, 7 crises crashing simultaneously into a state with zero resilience, zero diversification, and leadership pretending everything is fine. Florida isn't facing the biggest collapse in US history because of bad luck. It's collapsing because of arrogance, denial, and the simple truth that no empire can survive once it starts believing its own illusion. If you found this analysis valuable, hit that subscribe button and drop a comment below. What state do you think is next? Let's discuss in the comments.